Charlie Munger, the legendary investor who partnered with Warren Buffett for nearly 60 years, died in November 2023 at age 99, just 1 month before his 100th birthday. He left behind a fortune, but more importantly, he left behind a philosophy that changed how millions think about wealth. One of his most powerful insights: small numbers test your patience. Large numbers reward it. This simple statement contains the secret to building generational wealth. Let me break it down. When you start investing, the numbers are small. You put in $1,000, earn 10% in a year, and you've made $100. $100. That's dinner for two. It feels insignificant. You check your portfolio daily, watching those tiny movements. Up $5, down $8, up $3, and it's frustrating. This is the test Munger talked about. The small numbers phase is psychologically brutal. Your brain screams, "This isn't working. I need to do something different." So what do most people do? They panic. They chase hot stocks. They day trade. They jump from strategy to strategy, desperately seeking faster returns. Munger called this approach a disaster, saying investors should adopt sit-on-your-ass investing, finding quality businesses and holding them for decades. But that requires patience most people don't have. Here's what happens if you pass the patience test. Compounding takes over. Munger famously said, "The big money is not in the buying and the selling, but in the waiting." He understood what Einstein allegedly called the eighth wonder of the world: compound interest. Let me show you the math. If you invest $10,000 at 10% annual returns, year 1 you make $1,000, total $11,000. Year 5, you've made $6,105, total $16,105. Year 10, you've made $15,937, total $25,937. Year 20, you've made $57,275, total $67,275. Year 30, you've made $164,494, total $174,494. Notice what happens. In the first decade, you made about $16,000. In the third decade alone, you made over $100,000. The numbers got bigger because you're no longer just earning returns on your original investment. You're earning returns on your returns. Berkshire Hathaway's investment in Coca-Cola exemplifies this perfectly. Bought at a sensible price and held for decades as earnings and dividends compounded with minimal action but maximal results. From 1962 to 1975, Munger ran his own investment fund and earned 19.8% annually compared to just 5% for the Dow Jones Industrial Average. But here's the key. He didn't achieve this through hyperactivity. Munger said, "If you took our top 15 decisions out, we would have a pretty average record." It wasn't hyperactivity, but a hell of a lot of patience. The large numbers, the life-changing wealth, come from making a few excellent decisions and then doing nothing. Resisting the urge to tinker, ignoring market noise, just waiting while compounding does its work. Berkshire Hathaway's per-share book value grew from around $19 when Munger joined in 1975 to more than $400,000 by 2021. Representing a roughly 20% compounded annual gain. That's what patience looks like in dollar form. Munger lived his philosophy. He became a billionaire not through day trading or chasing trends, but through patience, discipline, and letting time work its magic. Small numbers test your patience. Large numbers reward it. The question is, can you pass the test? Most people can't. That's why most people don't build generational wealth. But now you know the secret. The only question left is whether you have the patience to apply it. If this helped you, subscribe for more simple money tips.